In this week's episode of the Stockscores Market Minutes, we're going to talk about inflation and whether that is going to bring on a stock market crash. I'll do my normal analysis of the stock, currency, crypto, commodity markets, as well as the day trade of the week on Zillow, and then we'll do a market scan in search of opportunity. So is inflation going to crash the stock market? Well, in the past few weeks, we've certainly seen that is a concern among investors. We've had a number of sharp downward moves caused by inflation concerns. So it really is a focus of the market right now. Anytime we get that, we see that there's a sharp drop in stock prices. The large cap indexes are showing breaks of upward trends, and that indicates that caution is warranted. So let's take a look at the chart of the Dow 30 ETF. The symbol there is DIA. And you can see that it's done really well, obviously, since the COVID crash bottom. But what stands out most is that the upward trend line, and we've talked about this with the S&P 500 in recent weeks, but that upward trend line has been broken after making sort of a little double topping pattern. And then this past week, we were trying to make a comeback, and we actually closed quite weak and closed below the open. So what would a crash mean? Well, I often talk about how markets and stocks that run away from their linear trend lines eventually come back to them. So there is the linear trend line, and this is the very long-term chart. This is the monthly chart going back all the way to 1999. So you can see that we had the crash, the financial crisis crash, where the linear trend line was broken. Well, there's our linear trend line, and it keeps serving as support. Even the COVID crash was support for the market. Well, look at how far above that linear trend line we are. So if we do break this upward trend line, and we're flirting with it now, then we may see a fairly substantial move down to that long-term linear trend line. Now, I want to stress, we haven't really got a strong signal of it yet. We've simply got a break of the upward trend line, but what we are seeing is that all of this money that has come into the market and the supply chain issues, those are causing inflationary concerns, and they really are the focus of the market. And if that continues, we may see more weakness ahead. We'll watch the charts, stay tuned here each week, because of course I'll keep monitoring it. All right, let's take a look at the US markets overall now, and we'll start off with the short-term chart of the S&P 500. And there you can see the weakness that came late in the week when not only concerns about inflation, but also the Ukraine took effect in the market and caused stocks to move quite sharply lower into the close on Friday. So we'll see if that materializes into more weakness, but I think it's important that that short-term upward trend line was broken late last week. There's the long-term chart, the 3-year weekly chart, and you can see that we have broken the upward trend line. No falling top here, but if we now break down through this little support zone, we will have built the falling top, and that could lead to this support zone, which is fairly substantial sell-off. So we want to keep an eye out for that. On the NASDAQ 100, you can also see this is the daily chart. So there is your daily upward trend line broken from a little bit of a falling top. And then here we have another falling top and now breaking down here. So I expect that we're going to move down through this. A lot of it will depend upon what happens in the Ukraine in the next little while, but that could be another factor, plus inflation, that leads stocks lower. On the IWM, not suffering as much as the large cap stocks, and of course, a lot of the reason for that is these stocks are already down a lot. If you look at the typical small cap stock, it has been in a long downward trend for some time, whereas your typical tech stock or large cap stock is just starting a downward trend. So I actually think there's a little more safety in small cap stocks. We saw a little bit of weakness at the end of the week last week, but nothing too concerning just yet. We'll keep an eye on it. Canadian markets, there's the TSX 30, and what a difference between the TSX and the S&P. And of course, the reason why is oil. You can see that we have managed to break this little bit of an upward trend line. You see there the falling top that's formed. Again, this is the 30-day, 60-minute chart, but we are breaking that 30-day, 60-minute chart upward trend line from a little falling top, but have got lots of support here in the short term. as long as oil prices can hold up, the TSX should fare better. You can see it here on the weekly as well. The TSX has been going sideways for a few months, held up by that strong energy sector. On the TSX Venture, also not too bad. I mean, we are threatening a breakdown through this support zone, but we've managed to hold, and we'll see if that can continue. This is the weekly chart. It's really just kind of a sideways trading range, but we are threatening support from pessimism. Why pessimism? Falling tops. So if you have falling tops, that's pessimism on the chart. And if we can break down through this, then we're probably headed to this next area of support on the TSX Venture. On to currencies, US dollar, quite a bit of volatility of late with political tension, with concerns about inflation. Will interest rates go up? Will they not go up? All of these things a factor in lots of volatility in the US dollar. We broke this little flag pattern 3 weeks ago, and then the 2 weeks ago we sort of fell back. This week we stabilized. So a lot of uncertainty, but the general trend here is up, and so therefore I am remaining bullish on the US dollar. Cryptocurrencies, we'll start off with GBTC, which represents Bitcoin, and you can see, you can see that Bitcoin has broken this downward trend line. It did that on the daily chart and didn't manage to close real strong last week, so we may actually see a little pullback, a little consolidation, sideways action, but it is trying, and good support here is why the market should hold that level on GBTC. It's $25 a share. On Ethereum, again, this is the ETF representing Ethereum, and there's that downward trend line broken, starting to build rising bottoms. Has work to do. Anytime you have to overcome this amount of pessimism, it doesn't typically happen that quickly. You know, if you look back here, there was the break of the downward trend line. We went sideways for 5 weeks before it really started to manage the gain. So we're working on that bottoming process and expect it to take a little bit of time to play out. Interest rates, this is the chart of TBT, which is the inverse ETF on the 20-year treasuries. Essentially, if this goes up, interest rates are going up, and you can see that interest rates are rising, but there's still a lot of resistance on this chart. So what I think is most important is how this volume is increasing. You see that there's more and more people buying into the idea that interest rates are rising, and that could be, you know, a good sign that interest rates are in fact going to go up in the future. On to commodities, and there's gold, and we've talked about gold being in sort of this dead pattern for a while. It showed some good life at the end of the week last week, and largely because of conflict in the Ukraine. Anytime there's conflict, you tend to see spikes in gold, and we are trying to break out of this little pennant pattern. I don't think it's a definitive break, but I do think that there may be a trade in gold and gold stocks, and so watch that in the weeks ahead, because there's probably going to be some action there, especially if tensions continue to escalate between the Ukraine and Russia. Oil, very strong. It is overbought. How do we know it's overbought? Well, let's show you a simple rule. There's your linear trend line, and we're far above it. If I was to draw this as an upward sloping channel, we've essentially gone through the top of the channel. I didn't draw that perfectly, but you get the idea. When it gets a little extended, we tend to pull back. There is no sign of weakness in oil. I'm not saying that we should run for the hills yet. I just say that we should be very cautious, because anytime you're overbought, it tends to bring some profit taking, and we'll have to watch for that. Finally, the fear chart, pretty good bump up in fear Thursday and Friday, again motivated by inflation, but probably more so on Friday by the concerns in the Ukraine and Russia, and that caused the VXX to spike higher. It was probably one of the better trades in the afternoon on Friday, and we'll keep an eye on that. We tend to see it not last long. You can see over and over again, all these little spikes don't tend to last very long, but nonetheless, if you're a day trader, I would be looking at trading VXX, UVXY, VIXY. They'll do the same thing essentially. So my ratings then, long-term, I've switched my rating. Well, my long-term rating is neutral. My short-term rating I've lowered to bearish just because of that volatility that we saw at the end of the week last week. I remain neutral on both time frames. On the Canadian market, it is being held up by those commodity stocks, not just oil, because gold is also starting to help. Gold, neutral long-term, bullish short-term, and oil, I remain bullish on both time frames, although with some caution given the overbought nature of oil. Inflation concerns have again spooked stock market investors, and that caused some selling pressure near the end of the week that could develop into more weakness in the short term. We should trade cautiously right now. There is lots of volatility, and that means lots of whipsaws that can take you out of your positions. Gold may soon break out of its lengthy pattern. It is trying to do so. Oil remains strong, but at risk for profit taking, and fear is rising. All right, now let's take a look at the day trade of the week. And again, these are always examples of stocks that are picked up by my algorithms that run in our active live service, which is something that you can subscribe to at stockscores.com for active trader members. So the day trade of the week this week is Zillow, and it had a big gap up on the open, and it made its action candle on the open. Now, by itself, action candles are what my day trader strategy looks for, but when there is a gap up, I like to see a second signal. I like to see the market pull back, come up to the highs of the action candle, go sideways quietly, and then break out. And it did that at 11:30, just after 11:30 on Friday. However, when the news hit that there was, people being told to leave the Ukraine, American citizens told to leave the Ukraine, the whole market went down very quickly. And even a good day trade setup had a difficult time overcoming the market weakness. And so this decent looking trade setup turned into a loss. For $100 of risk, the share position was 70 shares. So even though this is a $58 stock, it was only $3,970 in capital, which you could margin 3 to 1. That should be $1,300 of margin capital. 1,333, of course. But at the end of the day, it made a 0.93% or 0.93 RR move, a 9% loss, a $93 loss on a very short trade for that one-day day trader hold. So sometimes good trades don't work, and I wanted to show that because that was the kind of day it was on Friday. If you found it frustrating, trust me, there was very few trades that worked into the close, except those inverse trades like UVXY, VXX, those sorts of things, some of the inverse ETFs. All right, now let's take a look at the Stockscores market scan and see if there's any stocks showing strength with abnormal activity breaking from good chart patterns. So we're just going to jump into the Stockscores market scan tool and run what I basically run every single day. We're going to run the abnormal break scan. I'm going to do it on the Canadian market, and the reason is there's a lot of gold stocks on the Canadian market. And you can see on a day when the market was down a lot, we actually have a lot of picks on the Canadian market. And if you just scan your way down the list, you see a lot of gold, silver, some energy, because of course those sectors of the market are doing well despite the market weakness. So the question then is, do they have the right kind of chart pattern? If we just use this as an example, you can see that this stock has been in a downward trend for a long time, and it has not yet broken the downward trend. It did have a little bit of an increase in volume. It's trying to bottom, but until it can break the downward trend from rising bottoms, I would just leave this one alone. All right, so we won't go through each one that slowly because it'll take forever to go through 29 stocks. But when I see something like this where I'm getting a breakout through resistance from a little bit of optimism, that is more interesting. You can see the volume spike there. So when I see something like that, I go to the 3-year chart, and I want to take a look at that long-term picture. And this is a pretty decent chart. Now, it really started its strength back here when it broke from that ascending triangle, and then it's been going sideways for 6-7 months and now breaking out. This is a good setup. It's not a great setup, and the reason why is that there's a lot of volatility on this right side of the pattern. This stock has gone from $1.50 to $2.50 in a relatively short amount of time, and so these people that have bought in the last little while are now in a profitable position. They are more inclined to take profits. So I would rate T.ESI a 6 out of 10. All right, moving along, gold stocks. Indigo, strong earnings on Friday, boosted that stock. Anyone that went into an Indigo store over the holidays shouldn't be surprised by that. Yamana, let's take a look at this on the 3-year. So this is a stock starting to turn. I think this is a decent chart. You can see that the downward trend line is getting more and more shallow slope, and we're starting to break through that, having good support here. I'd give this a 6 out of 10 as well, meaning I think it has a 60% chance of moving higher. So on to page 2, go through those again. Sandstorm showing a little bit of life. I wouldn't buy a whole bunch of gold stocks. You could probably find 10 that have similar patterns right now. Here's another one, Eldorado Gold. Yamana's chart very similar to this. But of course, when you buy a whole bunch of them, you're essentially making a lot of risk in one sector. So you want to sort of come into these slowly, maybe take a nibble, dip a toe in the water, if you will, on some of these names They do look like they have a 60% chance of moving up, but you don't want to own 5 of them right now until the momentum really starts to build. All right, there's some of the gold mining ETFs. There's an oil ETF way overextended, well due for a pullback. Next page. Vermilion Energy been one of the hotter energy stocks, but today just so overextended to the upside, I just don't want to chase it. No reason to sell it. It is still holding up well. There's Barrick, another large cap gold miner that is starting that turn, starting to break downward trend lines. Take your pick. Pick 1 or 2 of these things, come into them slowly, and as momentum builds, if it builds, then you can start to add more. Here's the kind of chart pattern we really like to see, just as an example. Here's sideways trading. This is a pattern called a rectangle consolidation, and then it broke out of that pattern. Stockscores are in good position. That was, really the time to enter. Now it's a hold, but it's in a nice linear trend, and it remains a hold as long as it can continue in that linear trend. All right, I think we're just about done here, so we'll wrap that up there. Hope that you have enjoyed this week's Market Minutes. If so, give it a thumbs up, subscribe to the channel. Hope that you're back again next week. We do this every week, and so until then, trade well.